we have going to a company specific. We have Nisan Joseph, who is the CEO of Metro Brands, joining us. Mr. Joseph, hi. Uh, Give us a sense of the kind of volume growth that you're seeing, and are you seeing some challenges with respect to the kind of impact, which is geopolitical impact, which is coming in, and changes in the kind of spends which are coming in?
Hi, Sajid. Good morning, and thanks for having me. If I reflect on last year, consumer demand picked up steadily through the year, and you can see that in our numbers through the years. It capped off a year of a 15% growth, 20% coming in the last quarter. Having said that, I think we started seeing some early signs of potential input hikes, with raw materials and freight, obviously. But we've been able to mitigate against that quite well. So in the short term, we don't see any impact from it. However, if that crisis continues and it continues to drive things like oil prices up, if it continues to drive things like or lower the money coming in from expatriates around the globe into India, those things will have an impact. But I think bottom line is that Metro is well prepared to mitigate any short-term risk that we see.
Impact going to be from a demand point of view or from a cost escalation or point of view for you?
Yeah, I think if there was an impact, it would start off with input cost rising, though we mitigated most of that for the next 6 months, right? And then, of course, that leads to having some demand softening if it's a long persisting situation. So far, we haven't seen it yet, but, we always stay alert. We prepare for the worst and hope for the best.
Hi, Nisan. This is Harsha. Give us a sense. I just want to take a step back, try and get your perspective. Q4's numbers were extremely strong for you. One, what's the outlook like for FY27? Can this kind of growth number, can the kind of performance that you've put out in Q4 continue to play out going forward as well? What's the take?
I think on a long-term basis, Hirsch, we look at having a sales growth around 15%. With our EBITDAs hovering in the high 20s, hitting almost 30%. Those are two numbers we're comfortable with at a longer period of time. Having said that, though, it's not always going to be every single quarter, right? I mean, some quarters you're going to see a blip up, so you're going to blip down, right? And then, of course, in India, we have a lot of, whether it's wedding dates shifting, whether it's festival dates moving, there's a lot of action happening between quarters. But on a long-term basis, that's the number we've guided to. It's also historically, Hirsch, that's a number we've consistently performed to. So we feel very good about those numbers being a number that we can bank on going in the future.
And what were the levers for Q4 that played out for you in particular?
Yeah, I think one was obviously demand was good, right? And we also saw a lot of new customers come into our banners, our multiple banners across the country. And, that was driven largely in part by some of our marketing efforts that we've been putting into play. So I think it's investments in marketing, it's investments in our CRM technology. It is rising consumer demand. I also think that, there's probably a little bit of a shakiness in the unorganized market. That's creating a little bit of crunch there. So consumers are migrating a little bit more to the organized markets.
From a store expansion strategy which you have, what is the kind of expansion plan that you have for FY27?
Yes. So last 2 years, we've seen the highest growth for Metro Brands in a new store opening. But here's the reality, Sajid. It's not a question of how many stores we open. What we want to do is open profitable stores, right? And sometimes market conditions, rents might be a little bit too high. They might not be the most favorable locations. So real estate is both a science and an art, with location being the driver. And we want to make sure that we get the absolute right location because we sign these locations for, almost a decade at a time. So if you don't get that right from the first year, it's going to be a long 10 years ahead. The good news is, we have the capital in the company to expand. We have the multiple banners that we can look at expanding. So it's not a question of not having our ammunition for it. It's a question of finding the right targets that make sense for us, both in the short term and in the long term.
What was the same store growth like for you?
Yeah, so we don't disclose, we don't break out our numbers, Ajit, by the different segments. But I can tell you loosely, 30 to 40% of the total sales growth you see is coming from like to like. The other 30 to 40 is coming from new stores, and the remaining is coming from an annualization effect of stores.
What would be the breakup between stores and online? have you seen a traction for online and modern trade, which coming
Yeah, so
into?
the good news is our online business continues to have high double-digit growth. Last quarter, it clocked a 53% growth. And the better news is it's not coming at the expense of our brick and mortar stores, right? So consumers still want to shop in a brick and mortar environment while they still enjoy the convenience of online shopping. And we as Metro Brands are well positioned on both channels of consumers to take advantage of wherever they want to shop, whenever they want to shop.
Nisan, give us a sense of this. With regard to a revenue per square foot, I see that it's at 17,300 rupees versus 18,200 rupees same time last year. My sense is that it's also because of the stock count increase that you've seen, which is around 15 odd percent in terms of stock count increase. But talk to us about the vintage stores. Revenue per square foot in vintage stores, has it gone up?
Yeah. So let me answer it two different ways. One is, to address your question, the square footage is highly impacted by new stores in two ways. One is a mix of stores that we have, right? So if we open stores that don't have a normal productivity, as that's our average, it's going to pull down the average. If you open a high group of stores that have a higher degree of higher number relative to average, it's going to pull up our numbers. Good example is Crocs runs really high. If you open a lot of Crocs stores, you're going to see that average square foot move up, right? So it is really a mix of stores. The quarter for quarter is we had a growth last quarter on a sales per square foot basis. So it's not, sometimes you blip up and down, like I keep saying, right? I think we started off the year kind of soft, and then we picked up momentum through the year. Then, of course, you have all new stores and all the banners seldom come out and do more than the average of that particular banner. So if a new Metro store opens up, it highly likely doesn't do as much sales per square foot as the average Metro store does. And that's true for our Mochi and our Walkway and all those banners. So it's a double effect that you have. One is the new stores depends on the mix of stores that you open. And secondly, they come in at a lower average anyway till they mature.
Nisan, can you also give us a sense of how Clarks is shaping up and the scale-up plan for there? And also, if you can give us a sense of the mix between your own brands and third-party brands?
Sure. Well, Clarks is shaping up really well. We're very pleased to see how good it's doing in our stores. Right now, we have it in about 350 of our Metro Mochi doors, and its online presence is doing very well. We just launched the men's collection a few weeks back, and that has also been performing well. And we hope to see that continue. Later on in probably Q3 of this year, you'll start to see us open Clarks stores, mono-branded stores. So that's the runway for Clarks growth. In total, Metro sells 70% of our own brands. So that would be Metro Mochi, the Da Vinci brand, the Walkway brand, the J. Fontini brand, right? So 70% of all the sales we do is internal, is our own brands. I don't call them private labels because private labels is often associated with a lower cost, but it's really our own brands. And then 30% of it is external brands, which is a combination of brands that we just sell in our stores that we don't have any strategic relationships with, or we have strategic relationships, such as the one with Crocs or Clarks or Fila, and so on and so forth.
Nisan, it was a pleasure talking to you today and getting a perspective on the entire operations of yours. Thank you very much. That was Nisan Joseph, CEO of Metro Brands. We'll step into a small break and we'll come back with more.